we're going to look at the stock market. Interesting action, of course, as the stock market moved down after Mnuchin's comments. Also got soft overnight a bit, and when now the third company, Johnson & Johnson, put their vaccine trial on hold as people are getting sick, and they already are going to have a huge problem with getting people to take these vaccines if they ever do get one. Everything I read says they'll never have a vaccine, but they'll have great therapeutics to help us deal with this terrible pandemic that we're in around the world, and hopefully something will come that will make a very, very big difference. In the meantime, the companies that are in the forefront are showing probably the normal difficulties, and that's how you shake out what doesn't work. So the process is probably working for them, but again, the question is a moving target and something that apparently now the news is that can reinfect people. That makes it extremely challenging. Here's the S&P 500. Now, I have, as a person that has looked at the timing in here and the more negative situation in the NASDAQ, I did not believe that the S&Ps would easily get back up and test the highs, even though the cycle pattern suggested they should. So I've been more negative based on some of the evidence than on just looking at the individual chart, which has not proven to be the most accurate. And we have a slight little upturn here in momentum, which is proving that upward turn in that cycle. So the probabilities of taking out 3588 have increased, and that's why we have a clearer projection there. That green dashed line that you can see is the techs, which lines up with the NASDAQ, and is even though we had a buying panic here earlier in the week in those stocks that have been laggards, and Apple led them on the upside as that stock got upgraded, and then they had this Apple 12 event and new products, which turns out to be more of a non-event. Another thing about this discussion about the techs and Apple and the relationship to the stock market, well, Apple is a major factor in the stock market. No matter how much we don't like to give it that much credit, the massive weighting that it has in the indexes, and the importance of how it performs, it just is very important. And the Apple pattern is not bullish. The Apple pattern, even though it had that big upside move, has not changed by that much. And to me, the risk rewards favor the downside, and that's that green dashed line that you have right in there. So I still think that the NASDAQ is going to underperform, even if the S&P 500 does meet the highest probability, which is testing or taking out that 3588 high in here. And you can see we're having it projected up to that area and then turning over, and that the NASDAQ actually has a little lower track in there because we're comparing it there. So that's kind of a look at that. Now, the corrective period that we were looking for out here, which we thought would be originally June, July, August, really a 24-week advance, was extraordinarily late. And then a 27-week low we haven't really had in years and years. So that did throw us off, but now we're back on the proper timing, as you can see in here, which makes analysis easier. And we should be able to be a little more accurate. Here is the short term, and again, we have these complex cycle structures in here. The reason we do that is because we have the dash line, which is essentially what we consider to be the normal movement in there. The top one, the green line, takes you to the highest likely fib extension target that you see right up over there, and that equals pretty much that old high at 3588. And then the bottom one in here is more reflective of it giving up the entire amount of gain down there to the cycle low support. And that's how we do the structures. And this structure was changed from negative once the shift came to neutral to positive once it moved through the resistances. So I'm very mechanical about that. And even though I might look at it, when it was negative as saying it's negative, when it's neutral saying it's neutral, I'm just going to continue to do what the market tells me as far as the analysis goes. And once it moved up through resistance into the top channel, it tells you that you're likely to get a decline, but it's likely to configure bullishly. And then what happens is that the next cycle after that, after this correction, then configures in a way that points up to test the highs. So, we'll be redoing this when we have the next anchor point right over there. And that just says that you have a likely decline, which we talked about last Friday, into this period of 1020 to 1024. And then, so that's not very long, it's only about 5 to 7 trading sessions. And then likely moving up again. And that's really a support zone. This should actually say buy zone because the likelihood of breaking it is small. The likelihood of it holding and then moving up again is large because of the positive situation that we have here in the weekly. So again, we're looking at multiple time frame analysis, positive rising phase in here, upward turn in momentum, upward turn in momentum here, a correction that doesn't go very far, and then you move up again. So that's what we see there, and some of the evidence in there really is overall for now positive, and that we would use a decline as a period to buy versus a rally as a period to sell right now because of what we see here overall.